So if you know the way the market moves, you know market has structure to it, right? The market has structure to it. So one thing I love to show you guys is forex swing highs and lows. You can look this picture up on Google. It's all over. It's pretty easy to identify. But one of the main things you have to understand is what creates a swing high and what creates a swing low in the market, right? A swing high essentially is a high point in the market right here. So let me annotate on my screen. So this is a high point in the market, and to the left of it, there's two lower points, two lower candles, and to the right of it, there's two lower candles. So a lower low and a lower low, lower low and a lower low. Then this is a swing low, right? One low point in the market where the market throws a wick, and then to the right, there's a wick higher than that and another wick higher than that. And then to the right, there's a wick higher than that and another wick higher than that. This is just basic market understanding that you guys should know, because when you're looking at a market, you just know, okay, we're approaching a swing low. We have a swing low, a swing high. Now, what are we expecting next? A retracement, right? So the market moves with impulses and corrections. So, for example, if I mark this up, the market created an impulse here, a correction here, impulse here, correction here, impulse, correction, impulse, correction. If you can just identify which direction the correction happens, then you'll be able to trade in that direction, right? I like to get very technical with my charts. If you guys don't already know that, we got 181 people on. Let's see if we could get this to 200. If we could get this to 200, then I'll drop the recording in the chat. But essentially, the market moves with impulses and corrections, right? And you want to be able to identify the correction in the market. So, for example, one of the things I used to teach a lot, which I don't really touch up on much anymore because of deuces, but there's three ways the market moves, right? One is an uptrend, one is a downtrend, and one is, who can tell me what I call this? Who can tell me what I call this? What do I call this? What do I call that? Does anybody know? Consolidation, yes, but I call it something else. The no trade zone. Exactly, the no trade zone. So I don't trade consolidation, but I trade the breakout of consolidation. So let me show you guys what I mean. I'm currently on the daily. Let me go to the hourly. So for example, this right here, right? This right here, we have consolidation right here. The market breaks out. You take the retest right there. Simple, right? This is simple. You identify the trend after the breakout. So you know the trend after the breakout. So you see right here, the market broke out, gave you the retest right here, and then it shot up a lot. But one of the main things you guys want to look for is patterns in the market, because last week, one of the main things I traded was only head and shoulders. I was trading a lot of head and shoulder patterns, and it's very, very simple to identify. So, head and shoulders, what creates a head and shoulders, right? So, you have that, we'll start with inverted head and shoulders. You have that downtrending market, right? So, you have that market on a downtrend like this. Sorry, my trading view's been slow lately. You have that market on a downtrend like this. What it does is it has a high point, then it has, so this is the high, this is the low. This is the lower high, this is the lower low. But what happens is this lower high right here, this lower low right here gets broken. When it gets broken, you can already start to see that the market is going to shift in trend, meaning that it needs to create a right shoulder. So this is the left shoulder, a lower low, lower high, and then another lower low, and then a higher high. Does that make sense? A lower low, a lower high, a lower low, and then a higher high. Let me just make sure I'm monitoring the chat. Um, then what happens is the market comes back to that lower low, the first lower low. Let me drag that. Comes back to that first lower low, completes the head and shoulders pattern, and then continues in its uptrend. This is the inverted head and shoulders, right? It starts to become really easy to identify. Once you guys are able to identify that, you'll be able to make really easy money in the market. So if I go to the line chart, right, what do we have here? We have a high, a low, lower high, lower low, and then this lower high was broken. So what you guys can do is get the trend line and cut the head off of the market. Cut the head off, meaning get rid of the head and just draw a trend line from the left shoulder to the right shoulder, just like that, right? Go back to the candlestick so you see that it completes the inverted head and shoulders pattern, and this market shot up 144 pips, right? And it didn't stop from there. It obviously kept going, right? So it obviously kept going. So that's the inverted head and shoulders. Let me see if I can find a normal head and shoulders pattern for you guys to look at. Start to train your eyes to see this though, because the more you see it, the more you'll be able to trade it, the more you will be able to identify reversals in the market. So right here, right? What do we have? We have a low, we have a high, we have a higher low. This is basic market terminology. And we have a higher high. Then what happens is the market breaks below and then it retests this neckline right here. The left shoulder is the neckline, right? So Oren Wright says it best: sell right, buy right. Sell the right shoulder on a regular head and shoulders, buy the right shoulder on an inverted head and shoulders. This is so easy to trade, guys. Like if you just understand head and shoulders, then you'll be able to make easy money in the market. Who knows the other three patterns I love to look for in the market? There's three more patterns I love to see in the market to tell me that there's going to be a reversal. There's three other patterns that tell me a reversal. WMV. Wow, everyone's saying WMV. The W's, the M's, and the half of Batman. The W's, the M's, and the half of Batman, right? So what is a W? A W is essentially after the market. So you guys see how this is a consolidation phase right here. This is consolidation. The market pushed down 1, 2, and then it gave you that final push 3. So always remember the number 3. The number 3 is really important in the market, right? Why? Because humans are emotionally attached to that number. So if the market pushes in 3 times in one direction, retail traders like to trade in that direction. But if you understand the way the market makers move, is they trade the opposite direction, which is the true trend. So what is a W? A W essentially is a double bottom, right? It's essentially a double bottom where the market spikes to the low, creating a first leg, retraces, and notice how it consolidates right here. Consolidates right here. Most people would have traded the breakout of this consolidation. They would have traded the breakout of this consolidation, but what they don't know, it's a second leg of a W, just retesting this area right here. Just retesting this right here, creating the second leg. So if you go to a line chart, it's easier to see that this is a W. So let me show you guys this. That's a W right there. Easy, right? Another one is the half of Batman. This right here is head and shoulders right there. If you cut the head off, that's a head and shoulders, and it's also a half of Batman. What is half of Batman? Half of Batman really looks like half of a Batman. All right, so what is half of Batman? The market goes up like this, creates a high point, right? Creates a high point, comes back down, and then it comes back, but it never came back to that high point. It never comes back to that high point. So watch this. You guys will see what I mean. Does that not look like half a Batman right there? That's essentially what it is. So you have this market right here that pushes up, creates this swing high in the market, creates that swing high in the market, and then it never comes back. It never comes back. And how do I trade half a Batman is I trade it with deuces, which is what I'm gonna show you guys, right? I'm gonna go over that in a bit. But that's the half a Batman. That's the inverted head and shoulders, the W's, and then there's one more, the M formation, which is essentially this right here. The market pushes up, same thing as a W, but opposite, right? The M formation comes down, right? Comes back up, and then it goes down, right? So that's an M formation right there. EN on 15-minute perfect half a Batman. Yeah, one thing that traders mess up on is looking for M's and W's in the wrong areas of the market. I wasn't gonna go over it today, but I'm gonna go over it again. The cycle of the market. You have to understand what cycle you're in before you trade a W and an M. So I've seen people trade W's at the top of an uptrend. Like, why are you trading a W at the top of an uptrend? Yes, this is an M to W, but ignore that for now. Ignore that for now. Focus on the teaching, all right? So, what I like to go over a lot is the market cycle, right? You really, really have to understand market cycles, in my opinion, when you're trading any strategy, right? So when you're trading any strategy, it's really good to understand the market cycle. So what is the market cycle? This is the cycle right here, right? So it's basically the psychology of the market. I learned this from Steve Morrow, not Wyckoff or Wyckoff, whatever his name is. I learned this from Steve Morrow actually, but essentially we have a consolidating market, right? This is the beginning of the cycle, right here, right? We have a consolidating market. Then what the market does, I'll show you guys gold in this case. So if you guys want to know the outlook of gold and all that, I'll show you guys right now. So the market breaks out one way, pushes 3 times, and then it reverses, right? So say this is Sunday. Sunday, the market is consolidating. For example, today, market open is consolidating. Why does it consolidate? So it can collect orders, so it can grab liquidity, so it can take your money. So the market can say, I'm sorry for your loss in all these zones right here. The market wants to take your money. That's the goal of the market. You have to understand that the market's not just moving. Every movement has a reason to it. There's money for the market to be made, right? The market is taking money from you. You have to understand that you want to trade with the market makers and not against them. You want to trade with the banks, not against the banks. Does that make sense? So, we have 208 people. Wow, you guys continue to surprise me. But essentially we have that reversal that happens, say, either on Monday or Tuesday, right? Monday, Tuesday, that reversal happens. What type of reversal would it be? It could be a W formation or an inverted head and shoulders in this case. And then what does the market do? See, you have to understand, why does the market stall at certain points? Why did the market stall right here, right? Because most people thought gold was a sell. Most people thought gold was a sell long term from this area. Yes, it was a sell. Yes, we caught that sell, but it wasn't a sell long term. All right, it wasn't a sell long term. And if you look at this right here, another thing that helped me catch the sell is a head and shoulders. This head and shoulders right here. See, this is the left shoulder, this is the head, this is the right shoulder. Just get really good at identifying those. All right, so um essentially why the market stalls right there though is because of structure, right? It makes people think, it makes retail traders think that this is a long-term sell. So what do? They start to sell, and when the market shoots up like it did right here, people start to panic, and then they keep selling and keep selling. Then they stall right here so people can keep selling. People keep selling. See, if I look left, every time the market stalled, before it broke out, look how there's a retail resistance. That's what we call it, retail resistance, right? What's that mean? It's a retail resistance. People would have said, okay, this is a resistance, sell it, right? But no, you got to understand the cycle of the market before you start to trade in any direction. And that's what I like to do. So let me show you guys the rest of this, right? So the market will push like this, right? It'll start to push like this, and then it'll create, in this case, say an M formation. And then you'll see a huge drop like that. So that's how the market cycle works. That's the cycle of the market right there. Me? Why are you saying me? So as we can see on gold right here, you see gold was in that phase of consolidation, but after it spiked to the low, it's yes, it's the head, but also you got to understand, why did it spike there? What made this market spike there? It spiked there because it's a fake out. It's a fake out. It's taking your money. It's taking the money of the people that have sell stop orders, and the people that bought, it's essentially hitting their stop losses. So when it does that, it shifts away. The market shifts away in one candle right there. So it's too quick for you to manually get out, right? It shifts away. Can you show us before May 15th why it spiked down? What trend gave us the reason for such a downtrend until the 21st? Yeah, I can go over all of that, right? But let me just go to it real quick. Okay, so this is pretty simple, right? The market, see, if you're going to look at this market right here, if you're going to look at this, if we were in that point in time, you need 3 to 5 days of history to be able to say, okay, why did gold do this? Right? Why did gold do it? I'll go from right here. I'll do it from here. Okay. So what do we have? We have, okay, a consolidation. We have a W formation indicating an uptrend. The market shoots up, goes into a level one, then it spikes up, consolidate upwards, right? So level two right there. That's a level two. And then it shoots up one, two, three pushes. Three pushes. What formation did it give us? It gave us the half a Batman right there. Half a Batman. It never came back. Never came back right there. How do I trade that? I trade that with the deuce, right? I'm gonna get to that in a sec. So it gave us a half a Batman. I don't really use Elliott waves, to be honest. Is it correct when breakout with low volume happens, it is higher possibility? Yeah, exactly. The breakout or the fake out usually happens right before London or right before New York, is what I noticed. So you get this right here, right? So we know it's a reversal. We get one massive push down, then a consolidation. Two massive push down, then a consolidation, then a three massive push down, and then a reversal. How do I know it's a reversal? Inverted head and shoulders. Then we push up, one right there. It stop hunts to the low right here and right here, and it shoots all the way up. And I believe it'll consolidate right here, shoot up to 1312 because there's a supply zone there, consolidate, or do a little head and shoulders and drop. Does that make sense? I'm going to explain supply and demand in a sec. So this is just for you to, that's a W on May 29th, really clean. Yeah, this is a W as well. This is a W as well. Um, so this is for you to essentially understand what the market is doing. This isn't, okay, this is my strategy, I'm going to trade this, right? This isn't the strategy. This is just your psychology when you go into the market. Whether you're trading deuces, acquisition zones, which Doug came up with, traps, whatever you're trading, I personally like to know the direction I am trading in, because I don't want to take a trade against the banks. I want to make money with the banks. I don't want to take a trade against the banks. That makes sense? Yeah, I'll be dropping this recording in the chat. We got 216 people on. So I want to be trading with the banks. So this is a full breakdown of gold right here, right? So now that I know, okay, now that I know all of this right here, now that I know what all of this did right here, it helps me know what this is going to do up here. Does that make sense, everybody? Drop a one if that made sense. That's the market cycle right there. That's the market cycle right there. And I haven't seen a single video on YouTube breaking it down like that, to be real with you guys. Um, so let's jump right into supply and demand, right? So before I do go on, does anyone have any questions on market cycle? Market cycle. I'll take any questions right now. All right, so yeah, that was a really good breakdown actually. Like that was a really good breakdown of market cycle. So, if you guys didn't take notes on that, then I'm sorry for your loss. um, so for market cycle, do you look at levels at all? I kind of do. I've always been bad with levels. I'm not really good with levels like that. But it's just good to know. Levels are essentially points of consolidation, but something like this confuses me when it comes to levels. And I'm just being honest with you guys. So something like this confuses me with levels. How, like me personally, I just don't know how to count levels when a market is trending this much. And GU was on a crazy downtrend, and Doug and I were on Zoom last night, and I'm seeing a potential reversal on GU, right? 10 levels. Why did you start an hour earlier? I didn't. 7 p.m. Eastern. Um, do you look at patterns then when looking at the cycle? So I look at the cycle. How do I start the cycle? So just like I broke down for you guys right now, right? Just like I broke down, and I haven't even started teaching what I'm gonna teach. Like this, that was just a bonus right there. So how do I? So what do I do to start looking at the cycle? Is I look for reversal patterns first at the bottom and at the top of the market. I look from there and I start from there. So I see a W here, right? And then I have all this that I broke down for you guys, the half of Batman right here. And then I see 1, 2, 3 inverted head and shoulders. And then the market. See right here, this was the best example I could use because most people thought this market was going to shoot down, but it shot right up. And this right here was actually a deuce level, which I took to buy. And I was on a call with one of my students, and I told them if gold broke this, it was this right here, continue to buy, right? Continue to buy. And I'll go over that with you guys in a sec. But one thing I want to touch on first is supply and demand, right? How I look at supply and demand. How I look at supply and demand. See, one thing you guys should notice, if you guys follow me, if you guys follow Trap King, and if you guys follow Doug and Oren, right, then you guys should know that we trade, all of our trading is based off of supply and demand, basically. Supply and demand is what defines our trading. Like, I learned that from Oren, right, originally, and then learning the way Trap King uses it, the way Doug uses it. It's just supply and demand is so subjective, but at the same time it's objective, right? We all find the same supply zone and demand zone, but we all use it differently. We all trade off of it differently. So what is supply and demand, right? First, in order to understand supply and demand, you have to understand engulfing candles. What is an engulfing candle, right? Who can tell me what an engulfing candle is? No, double bottoms aren't usually perfect. Who can tell me what an engulfing candle is? Can anybody tell me what an engulfing candle is? A candle that engulfs the previous. All right, Simone got it. Keep it simple, guys. Keep it simple. A large candle. That's it. It's just a large candle. So let me show you guys an example, right? What do I mean by large candle? So, so you have a nice bullish candle right here, right? The market is on a nice bull run like this, and out of nowhere, you see this large red candle. Right? You see this large red candle that comes through, and it says sorry for your loss to all the traders. What that means essentially is the market reached a certain point to where all the sellers came and took over the market, right? The sellers took over the market. So if you look right here, this right here is a large candle, right? A large candle. This right here is your supply zone. See, when a large candle takes over the opening and closing price of the previous candle, that creates a supply zone when it's like this. A demand zone is created, vice versa. So a demand zone is created like this. So you have those red candles right there, and then you have that large green candle right here. Supply and demand right there. That's supply and demand. So this is demand right here. This right here would be your demand zone right there. This right here would be your supply zone. Does that make sense? Drop a 3 if that makes sense. If you guys get the basic concept of supply and demand. Awesome. Perfect. 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 So let's look at it, right? Let's look at it on a live chart. Let's look at it on a live chart. What is supply and demand, right? So we see, you guys will say, how did you know to choose that point in the market? Because when I'm trading, I went over swing high and swing low, right? So for example, say I was right here in this market, right here in this market, right? If I was right there in that market, I'm looking at, okay, where was my most recent swing high to where I am in the market? This is it right here. And where is my most recent swing low to where I am in the market? It's this right here. Does that make sense? So I understand where I am in the market, what could potentially happen in the market. Then I look at the most recent supply or demand zone to the left, right? It's always going to be to the left, right? So you see right here, this is a supply zone right here. But that wasn't the most recent one. It was this one right here. It was this one right here, right? So what happens is the market always reacts at a supply and demand zone. It'll always react a certain way. If it rejects, so look right here. Let me zoom in for you guys. So look right here. The market shoots down, right? It creates that supply zone. And then when it breaks through that engulfing channel, which this is an engulfing trap as well, um, but I'm going to touch on supply and demand only. If you guys weren't on Trap King Zoom for engulfing traps, and I'm sorry for your loss. But um, no, I like to use the body. I like to use just the body, but in this case, I'm using the wick because that's what the market did. But essentially, what you have is the market engulfed one candle, created a bullish channel, engulfed another candle. So this is my fresh supply and demand. This is the first one I'm looking at because this is the most freshest one. This is the cleanest one to look at, right? It breaks through, it retests it, and completely drops, right? How many pips did it drop? Straight down, it dropped 110 pips, right? Then the next time back, what can you expect? You can expect another drop, right? So if you took the retest of this supplier demand, say you took it at the middle, all you want, honestly, is 25 to 30 pips. You don't need everything. You don't need 100. You don't need 1,000 pips. You just, honestly, 25 to 30 pips. That's it. 25 to 30 pips is really easy way to make money in this market. Then what do you get, right? You get another retest, and look how many pips it dropped from there. 108 pips, right? This is all off of one supply zone. But watch this. Watch this. Hope you guys are ready. What does the market do? It breaks out, right? It breaks out. You see that large candle that engulfed the supply zone and it broke out right here? Look how it breaks out and just continues in a massive uptrend. See, one thing I don't get is traders have this psychology where if the market shoots up, what goes up must come down. I hate when I hear that. I hate when people say that. What goes up must come down. See, in this case, the market said what goes up must keep going up, right? And the market says, I'm sorry for your loss. So you guys shouldn't just trade in the direction. If the market's been shooting up for a whole day and there's still reason to see that it's going to keep shooting up, then keep trading in that direction. Okay? So going down, age goes up and never comes down. Exactly, Trap King. Going down is just pullback, maybe. Yeah. Um, sometimes you get those pullbacks, but I personally don't trade. So if I see this market shoot up, I know this is an uptrend, then I'm not gonna. In this case, I did sell and I did catch the sell because of the head and shoulders. But this right here, I'm not gonna sell right here just to catch the pullback. I'm gonna wait for the pullback to complete and then I'm gonna trade in the direction of the market. Okay, so let's look for another supply and demand zone. Let's go to the daily on gold, right? People keep saying, where is gold going? Look at gold right now. Gold right now just hit a supply zone. Gold is at a supply zone right now, right? But I didn't use that one. I used this one right here because this one makes more sense to me. Gold right here. How do I know the pullback is done? I'll show you in a sec. Um, yeah, you enter off the pullback. Engulfing and weights. Yeah, so supply and demand is a really good trading style. It's really good to trade. Like I said, take what I teach you, make it your own, make it better, pay it forward, right? So Oren Wright is my mentor, and I learned a lot from him, and I developed deuces because of him, right? See, if you look at people like Trap King, he developed the engulfing trap strategy because of Oren Wright, because of supply and demand. Look at Doug, acquisition zones. That's all supply and demand, right? Don't ever. So somebody said it's going to consolidate, I believe. Don't ever, ever, ever guess what the market is doing. React off of what it just did, right? Don't ever try to guess what it's going to do. Don't, I know it's you're probably new or you don't know that, but never try to say, okay, I think it's going to do this or I believe it'll do this. No, I believe it'll do this because I don't guess consolidation, to be honest. That's just one thing I don't guess. So, did you guys get the concept of supply and demand? Drop a 9 if that made sense. So when it retests the supply zone and you enter to sell, would you take profit? Oh, okay. I could show you that real quick. How do you trade just supply and demand? How do you trade just supply and demand? I went over this with Doug yesterday. It's actually fire. If you guys understand this, right? So, okay, this right here. I love this part right here. So let me delete everything off of gold real quick. So what do we have right here? We have can everybody agree that this is a supply zone right here? Can everybody agree that this is a supply zone right here? And also what you want is if you guys want to know a really good supply zone or a demand zone, the candle that got engulfed, if it's less than 50% of the engulfing candle, it's a much more valid supply or demand. So this right here, it's not really a good supply zone because it didn't really engulf it. So look right here, right? So say we entered this cell, not right here, but right here, which we did. How do I know where to take profit, right? If I'm not taking 30 pips, which 30 pips would have been, right, 25 to 30 pips would have happened in an hour or two. But if I'm not doing that, where can I take profit? Who can take a guess? Where's my take profit going to be? Previous swing low. That's a good guess because I did teach swing low. But no, it's not the previous low. When I trade just supply and demand, my take profit is demand. So if I'm trading supply, my take profit is demand. The most recent demand zone is right here. But if I'm looking for a long-term demand zone, right here. You guys want to know why gold stalled where it did? Supply and demand. Supply and demand. Simple. Simple, simple, simple. See, it broke out. Most of you will say, oh, it broke out. I should be selling. No, it's a fake out, right? So you might have lost this trade, but it's a fake out. See, supply and demand is all over the market. If you can understand supply and demand with the patterns that I'm teaching you guys, then you will be able to make money. I'm telling you, supply and demand is very, very key in the market. All the market does is supply, demand. When there's a lot of supply, there's very little demand. When there's a lot of demand for something, there's very little supply, right? So if you look up supply and demand of oil prices, it'll start to make sense more, right? I'll send you guys a PDF on supply and demand in the chat. Um, if you're not in the Philthy Deuces chat, let me send you the link. Pretty sure everybody here is already in. Make sure you're in the Philthy Deuces chat. I just dropped the link in the Zoom chat, but what do we have? We have supply, right? We take the trade here. Your take profit, this is how your trade would look. So you enter at the bottom, right? Your stop loss would be right above the wick, which is right here, right? So 20 pips, take profit right there, 82 pips. So a 1 to 3, 1 to 4 risk to reward. Cedric, send it to me personally. So this is how your trade would have looked right here, right? And then after it broke through, right? After it broke through, where would your next take profit be after it broke through right here and it retested? Oops. After it broke through right there and it retested, look at this, right? Where's the next supply zone? Right here. Look how the market reacts at these supply and demand zones. Look how it reacts. It breaks straight through and it retests it. See that? It breaks straight through, retests it. And then look at this. Let's look for another example right here. I'm going to do the top of this candle. Look at that. It stalled, right? You would have caught your 25 to 30, I hope. Yeah, you would have caught your 25 to 30 pips. And look how it broke straight through, right? So that's all the market is doing. That's all the market is doing. Does supply and demand have pairs that it works? No, it works on every pair the same. It's the same on every single pair. So if I go to let's say UCAD right now, that's TrapKing's favorite pair, by the way. So if you guys trade UCAD, make sure you send him some signals. Um, so what do you have? You have this demand zone right here. I could spot that from a mile away. I could spot that from a mile away. You have this demand zone, and then we have a mini supply right here, but I don't consider that. Supply and demand is usually at the top. We don't have a supply zone yet, right? We don't have a supply zone yet. But if you look right here, look at this previous supply zone right here. Previous supply turned demand turned supply. Look at that, right? So this is a supply zone. The market breaks straight through, retest. Does it give you 25 to 30? Does it give you 25 to 30? Yeah, it gave you 25 to 30. It broke through to the downside. What do? You take the retest. You can literally trade off the same supply zone. Did it give you 25? Almost 25. It didn't give you 25 yet. But look at that. Watch this. Just look at this. I can go over this all day, right? I can go over this all day. This is so simple. And then next week, I'm going to go over something much more powerful. Um, you guys will be mind blown how to trade just supply and demand. I was showing Doug last night. It was fire. So look at this little supply zone right here. This little candle right here. Look how much reaction the market gives it. Why? Because the large engulfing candle, this is your indicator. This is telling you the direction of the market. It's telling you the direction of the market. So when it retests, you take that direction. And then it creates that supply. Watch this. It creates that supply right here. And the market does what? It retests, shoots straight up to supply. So you can take this trade from here to here. Very simple. Very, very, very simple. Right? So somebody give me a pair to look at because it's deuce time. US oil. What's the best plan to trade deuces from A to Z? I'm literally breaking down all the pieces you need. I'm showing you all the pieces you need for deuces. I'll go to US 30 since so many of you love US 30. I don't get it. Also, guys, I'm starting something new. Deuces works with cryptos, it works with everything, right? I'm starting something new, right? So I was like, I want to see more withdrawals. Just like Trap King, I want to see more withdrawals. Just like Oren, I want to see more withdrawals, right? I want to see you guys withdraw your money. I don't want to see you guys, just trading. I want to see you guys withdrawing your money. So I'm starting a new thing called Withdrawal Wednesdays, where every Wednesday you'll withdraw 10% of the profits you made from the previous week. Does that make sense? So whatever I profit this week, next Wednesday, I'm going to withdraw. So Withdrawal Wednesdays, you're going to withdraw what you made from the previous week, 10%. Drop a 3 if you're in for the challenge. And send the screenshot. You have to send the screenshot to the chat. You can block out however much you withdrew. Just send the screenshot. And if you didn't make much, if you only made $20, just withdraw what the broker allows you to withdraw. Right? So send it to the Philthy Deuces chat. I want to see every Wednesday. I want to see those email confirmations. Now look at US 30. US 30 is almost at the take profit that I had set for Deuces. Pretty ridiculous. I forgot who I called this for. So it looks like you guys are all in for Withdrawal Wednesdays. So, we'll start next week. So whatever you make this week, next week, Wednesday, you withdraw 10%. Okay? All right. So let's go over deuces. Okay? I need to use a different chart because that setup is too clean. Nope, not that. I got it wrong. Oh, yes, that is the only one. Oh, wow. A lot of you weren't in my chat. Okay. So, deuces. What do I use for deuces? I use something called the Renko bars. Okay. You need Trading View Pro Plus. Is Callie Angel on this call? Angel, are you on this call? If you're on this call, drop the link to the free Trading View hack. If anybody else has it, can you guys drop it, please? So what you need for this is TradingView Pro Plus. It's $30 a month, but my guy Angel has a hack where you can, you can essentially get it. Not, yeah, it's for free basically. You pay one time and it'll be free every month. Okay, so let me get that link for you guys real quick because I don't think anybody in this Zoom has it. You pay, I believe. Oh, there it is. Thank you, Nina and Jeremy. Appreciate you guys. So you pay one time and you'll be able to have TradingView free every month, the highest TradingView as well, which is $60 a month. So essentially, Deuces, what I use is the Renko bars. What are Renko bars, right? As we all know this market moves based off of time. Every single candle represents an hour of time. If I go to the daily, it represents a day in time. Okay. So I'm calling Trap King. So what do I use? This right here. This doesn't measure time, it measures pips. Okay, this measures pips. So what do I mean by that? So you see how this market is either red or blue, but all the same. They're all the same size. Whenever the market moves down a certain amount of pips, it'll print a Renko bar. If it moves another amount of pips that much, it'll print another one, right? Then if it reverses, what it'll do is it'll throw a wick because it went down that much and up that much. So the wicks are saying it went up that much, but it didn't form one to the upside, it formed one to the downside. I have no clue what. So how does deuces work, right? So do you guys remember what swing high and swing low is? If you guys remember what the swing highs and swing lows are, then you'll understand this a little bit easier, right? I went over swing highs and swing lows. Okay, so we get a swing high in this market, right? All you need is one high point or one low point, right? But in this case, since we're on a downtrend, we're going to use a high point to a low point, right? So you identify a high point. Now, for those of you that have already been trading deuces, I'm gonna drop a little extra sauce for you tonight. Okay. I'm gonna drop a little extra sauce for you. So what that sauce is whenever you look for a deuce, if you see a double top on the Renkos or a triple top, it is a much more powerful deuce. Let me say that again. Whenever you see a double top or a triple top on the Renkos and then you see a deuce, it's a much more powerful deuce. Yeah, I know. I see five tops too, but this is all together. Okay. So make sure you took notes on that. All right. Make sure you took notes on that. So what do you have? You have needs to be close. Yeah, as long as it's there, like as long as it's within this much range. If it's like from here to 2 years ago, then no. That's too much, right? All right. So you have this high point in this market, and for deuces, all you want to see is say you have these bullish ones. You just want to see one bullish, one bearish, right? You want to see 1, 2. So when you see that 1, 2, you grab your horizontal line, put it at the bottom on a downtrend, at the bottom of the second Renko bar, of the second Renko bar. So your horizontal line is going to remain in between the second and third Renko bar at all times. Then you grab your vertical line and put it right on that second Renko bar. Okay. You go back to your candles. Go back to your candles. Okay. Now, now let me zoom in. So you see that this market right here, right? You have your vertical line. Pay attention to the vertical line. What you want to see is a large engulfing candle. We didn't get that, but it's okay, right? It's okay. So this shifted. It was actually like 75% of this candle, like that at one point. Renko bars do shift. So what you want to pay attention to is that right there. Right, you want to pay attention to that right there, and then what you can do is grab a fib, put it from the high to the low as another confirmation. If the 618 or 50 falls right upon that horizontal line, I'll go over it again. I'll go over it again. Just follow along with me. Then that's a valid trade. But what else did I go over earlier? I went over swing lows and swing highs, right? I went over swing lows and swing highs. See, this is another trick, right? If you know how I trade, you know I love retests. No retest, no entry. So that horizontal line that I have is a breakout of the previous swing low. A break, retest, and then you trade into direction. But what I love most about deuces is the measured move. So what do? I grab my arrow, measure it from here to here, which is 5,000 pips on US 30, and then drag it to my entry, that is my take profit. Now I've been doing something a little different too. So it was right there. I've been doing something a little different with the take profit levels as well. So you see right there, that's my take profit. Who remembers what needs to be to the left? Who remembers what needs to be to the left? Structure, right? Instead, what I'm doing now, it's not really instead, but something just added I'm doing is I look for the most recent supplier demand zone to the left. Most recent supplier demand zone to the left. So you notice how this structure, I have to go far back to see it. But if I look right here, pretty simple. There's one right here. So I'll just take profit right here, right? I'll just take profit right here. I'll catch that and call it a day, right? But notice how it broke through that supply zone or demand zone. It broke through that demand zone and it just kept going. It just kept going. Now, how do you use stop loss? Set stop loss. I use it right. So if it's like this, my stop loss would have been right here, right above the previous high, right above the previous high. It'll be pretty big stop losses sometimes, but most of the time it's good risk to reward. Also, one thing I noticed is when you have that measured move, you can clone that measured move one more time, clone it one more time, drag it to, if it breaks out, drag it to the second breakout. Now look at that. If it breaks out, you can take that as well. Look at that. It went another 5,000 pips. I don't think you guys just noticed what I did there. You would have caught 10,000 pips in just 2-3 days. That's insane. 10,000 pips in just 2-3 days, right? So what do I mean, right? You catch this move down. When it breaks out, you can take the retest. You can take the retest of the measured move. This is an added, this is just an added. What if it's very far from where you're at? What do you mean by what if it's very far? Yeah, so this is the deuce, this is the measured move. And we took the retest of the measured move. Took the retest of the measured move. The Renko bars, the measured move is right here. Okay. You only trade when you are at the top or bottom. Mohammed, let me unmute you because I'm kind of confused with your questions. All right, Mohammed, unmute yourself.
Hey man, what's up?
What's up, bro? Where are you from?
Mozambique, Africa.
Where? Ooh,
Mozambique.
lit. Africa. Okay. So what was your question?
For example, I've been trading with your strategy, and I caught that move. But the thing is, when I was trying with other pairs, What if in the Renko bars I'm in the middle? For example, you said we need to choose any Renko bar that is in the top or at the bottom, right? And then you
Hmm.
make a vertical and horizontal line on the second Renko.
Yeah.
But what if you are, for example, 3, 4 Renkos below or above that?
For example, like this.
Exactly.
So in this case, I just wait. I don't trade until I see one form up. And then if I see a continuation down, I'll wait for one to form up and another one to form down.
Oh, okay.
So for example, like this market, that measured move I just showed you is
Yeah.
this right here. This is the breakout of that measured move and then the retest. But if you weren't trading that and you were just trading deuces and I didn't show you the measured move, look, created one up, but I saw a continuation in a downtrend because we broke the demand zone. So I'm not going to take that deuce up. I'm going to take the deuce down, put my vertical line, go back to my candles, and look, do you see that?
Perfect.
So what is to the left of this? We have a demand zone that got broken.
Yeah.
Supply and demand all day. Supply and demand. That's it. Right? We got a demand zone that got broken. I don't think this is 50% of the engulfing candle. Let's see if it is. Almost 50% of the engulfing candle. We have a continuation in a downtrend, right? So when you sold right here, yeah, you took a little bit of drawdown, but overall, let's see if it hit take profit. 2,000 pips, 2,400 pips. From here, look, it hit take profit right there. Easy.
Yeah.
But if you did the measured move twice, you would have caught 5,000, the whole move. Does that make sense? It's
Yeah, it does.
tricky, but you have to do it at the very beginning of a trend. You can't do it at the end of a trend.
So you rather wait for the perfect opportunity, right?
Yeah, so I get paid to wait. I don't get paid to trade. All right. Did that
Thank
answer your question?
thank you so much.
Yeah, no problem. All right, so um let's go over another pair. Let's go over one more example. One more example of a deuce. Somebody give me a pair. Also, if you guys post this on Instagram, make sure you mention me. I'm gonna drop my Instagram. All right, I'll go over. I went over gold the whole time, and you guys still want gold. I'll go over GJ. If you guys post on Instagram, make sure you mention me. I'll go over GJ. See, the thing with deuces is they work on all time frames. They work on any pair. All time frames, any pair. Right? And what you have to understand is, see, what I want to see more though is I want to see more of you guys dropping deuces in the chat. I want to see more deuces in the chat so we can all go over it together and help you grow and learn, right? That's what the chats are here for. The chat's here in my chat. Here, let me send the chat link one more time. Yeah, no problem, Joy. I'm gonna go over it one more time and then that's it. All right. You guys will have to just stay tuned for the next Zoom for some more sauce. All right. So, what do we have? We have, I'll use this example right here. You have a high point in this market on the 15-minute, too. I'm not even doing the 1 hour. So, you have 1, 2 down. You put the vertical line right there. I already went over supply and demand. You put the vertical line right there. Okay. So, what do you have? You have a large engulfing candle at the vertical line, right? Say you missed this. You could have caught this right here. And what your take profit would have been, I can show you that right now. Take profit would have been 107 pips. I don't know if it hit perfectly or what it did. Is there a preferred time frame? Yeah, the preferred time frame is the 1 hour. The preferred time frame is the 1 hour. All right, so right there. Okay. Then I drag this, put my horizontal line, and then let's see, did we hit take profit? Yes. But notice how when we broke through, I'm not sure if we did, but did we go another measured move? Yeah, I'll go over. Who's Rich talking to? This works on any time frame. The same thing I'm going over, you can do it on the daily as well. You can do it on the daily as well. You can do it on any time frame. So look how it broke through, and then it retested right there, and it almost, I think it just missed take profit. It just missed take profit on purpose too. It does that on purpose too. So, oh, a little bit up right there. Yeah, so we spread wouldn't have hit your take profit, but I like to call this, yeah, so stop loss would have been right here, right above the high, right there. So look at the risk to reward to this. Take profit one is always 30 pips. Okay, I don't want you guys to try to hold every measured move until you get really good at it. So stop loss right here, 20 pips. Take profit down here, 100 pips. That's a 1 to 5 risk to reward. And it got hit, right? Yeah, I'm so confused. The chat is confusing me. So that's deuces. Does anybody have any questions on deuces? Anybody have any questions on deuces before I end the recording in the call?